Guys, welcome back to the channel. Welcome back to a new video. I have some interesting stuff for you today, and it's also probably bad news. And I am going to show you why I had a losing trade and exactly what went wrong and what you then shouldn't do, because analyzing your own mistakes is super important in becoming a consistently profitable trader. Now, before we start diving in, please do me a favor, hit that like button, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think that's useful. And also feel free to follow me on Twitter and Instagram. Those links are in the description. And without further ado, then we're starting diving in. And the reason why I'm asking you always to follow me on Twitter and Instagram is because I update you there multiple times a day. And yesterday we took a pretty hard nosedive and I updated you right away. And then when we breached that 20k level, I also updated you. And here, this is an interesting video about someone telling the truth about stocks and short covering, and suddenly she get cut off. And I also said, we are closing below the 4,000 points for the S&P 500, and that for me is a super bearish sign, because that's a psychological important level. Other than that, I made a video yesterday exactly where I'm showing you why we are not at the bottom yet for Bitcoin and why we will crash again. Please do me a favor and watch that video. It's approximately 20 minutes. I'm going to show you with a lot of examples why we are going lower. Now, let's quickly head over then to BTC USD pair on the 15 minutes. And right here is actually where I took a long trade around this level, because I was really focused yesterday on grabbing the liquidity that is above here at approximately 20,600 to 20,800, and then also reaching that value area low, maybe just a little bit above, and then we could go lower, so that we have a big wick up and then a wick down. That for me would make a lot of sense, so that was a scalp trade. Now, as you can see, that didn't turn out very well. Why is that so? Well, there are two important things here. You can actually see already the top formation. The price tries to go higher, but it doesn't work out, and eventually we're rolling over and we are going low, and that actually went very fast. Another one, and that's actually the most important one, why this was a wrong trade and why you should not have taken it at all, is that we were at the top of the value area, meaning that you're kind of longing into resistance right here just for a small gain, and therefore it was a bit stupid. I always say putting in a stop loss once it's in profit. I was off for a little bit, and then I missed a stop loss, and before you know it, it dumped down. Eventually had to close the trade a little bit with a loss, but I just want to be completely transparent that also when I'm making a mistake, that you see it, and then explain you exactly what went wrong and what I could have avoided for the next time. All right, so this is then now the trading range. Like I said, yesterday we had a little bit of a dump. For a lot of traders, it was actually not such a satisfying dump, because yes, it was approximately 3%. I think from top to bottom was 5%, but we have not taken out these lows. Oh, sorry, that's the wrong one. We have not taken out these lows right here, and therefore there is still quite some liquidity underneath these two levels. And also for a lot of people, let me then quickly zoom out to the hourly, is that hoping that we were actually tapping here into that support and resistance box where we had the spike here. This was approximately 12th of July. Then we had the rounding bottom here, approximately 1st of July, and then the very bottom here at the halfway of June at 17,600. Eventually, I do think we are going to tap it. I do think we are going lower. I was actually hoping us maybe first to go higher to approximately maybe the point of control of this bigger range. And like I said also in yesterday's video, on Bybit, that point of control is approximately here at 21,500. It's also right the middle of this smaller trading range. So to go maybe a little bit higher like this, then get a rejection, trap a lot of long traders, and then really crash down to below 17k. That is a really preferred scenario right now, after our earlier scenario of dumping down to the golden pocket, then have a quick spike up to the value area high. Did not work out. Well, that's all fine. They would just change accordingly to the price action. But I have to say, if we're now looking at the broader perspective, then actually it looks pretty bearish. It really looks like the price here wants to roll over. Momentum waves are going lower. Yes, the money flow is coming up a little bit. You see just how little time we are spending here in the green and how much time we are spending in the red. That is just typical a bear market. If I zoom out on the 4 hourly, Yes, we had here the bullish divergence on the 4-hour. We are going higher, but you can see that once we made this dip, we had a red dot, green dot, and now a red dot again, and also here just loses strength. And this also looks pretty ugly where the money flow wants to go lower, and these are really just a little bit tight trigger waves, also signaling a pretty bearish sentiment. And BTC moves very much synchronous together with the S&P 500. So as you can see, the S&P is now trading below the 4,000 points, and I think now we really kind of lost it, and most likely we will close the day again below 4,000. That's just a super bearish sign. Then first I will be looking out for this level right here. There's approximately 3,900. I think if we are gonna go there lower, so then we kind of have this trading box right here. This is really like the support line. Then I think we can go within a matter of a few weeks to approximately 3,700, or maybe even really here the lows to 36. But eventually, my target for the absolute bear market here is maybe 3,500 to 3,000 for the S&P. I showed you again exactly in yesterday's video why that is pretty much possible. And of course, when this will go down, then BTC will go up. Also, I have noticed that BTC is very, very weak lately compared to other assets. For example, here the dollar index. Well, we usually say when the dollar index is pumping, BTC is dumping, and the other way around. Well, we have this scenario where we said, okay, we have two scenarios on the table, double top, this is going to roll over, we are going lower, or this is just a sideways consolidation before the dollar index breaks out, goes higher, approximately between 112 and 120. That was my long-term target. I have to say that the money flow is coming down, the momentum waves are coming down, so if it doesn't pick up steam very fast, then I don't know if that will work out. But what I actually want to show you is these are 4-hourly candles. Look at this. This was the previous 4-hourly candle. This is the current candle where we are in right now. So that was a big fat red candle. And now I go to Bitcoin and see the Bitcoin also had a red candle on that 4-hourly. This one was green, the one before, and let's go to the dollar index, was a little bit green also before. That's kind of weird because it should be the opposite. And we had that more often, that when the dollar index is now dumping, that BTC is just not picking up the pace, it's just not pumping higher. And it just shows the weakness in the market for BTC, and a lot of people are just risk off and really using every tiny pump to sell this. Well, usually the broader pumps come in phases of 3, and if that is correct also for this phase, then we have 1, 2, and then we have maybe another dump and then go higher. That for me would make sense. If it happens, I don't know for sure, because we're also here at the value area low of this broader range, approximately at 19,500. I think once we lose it and we close it daily underneath, then a quick dip into at least this support and resistance box makes a lot of sense. But if we would go eventually even lower to, let's say, 17,000 or 16,500 just to sweep the low here, that is my ultimate target in the next couple of weeks. And that actually would make a lot of sense for me. And then you get a period of sideways action and slowly grind up again. Because if we're losing here the 17,600, then we get a major bearish sentiment. Everyone thinks now we're going to 14K, 16K, of 12K, 10K. Then a lot of shorts will be opened, and then suddenly you see the price spiking up, and all of that liquidity is then suddenly being taken while the shorts are being opened up. So there could be a big move up and a big move down in a matter of just days. And then of course you see that sideways consolidation, a little bit of retesting, a little bit higher, a little bit lower, and then eventually the price will go higher. But like I said, again, I actually just want the price to go up, not because I'm a perma bull, absolutely not. Matter of fact, I am still very bearish. Also, that is a video that I made yesterday, that I'm still very bearish. The only reason why I want BTC to go up is because then we have a bigger drop down, because I'm very much convinced sooner or later we are going to break the 17,600. And the higher we go, because I missed this short position here, although I was given in advance. I told you already multiple times, I was on holiday. Unfortunately, that was actually my major short swing position that I wanted to take, which I missed. And then there were a few moments where I actually wanted to jump in, and the price was just dumping lower, and you never ever chase a dump or a pump. That is a one-way ticket to Wreck City. So therefore I was kind of just chasing the price all the time, so I have not really had a chance to have a major swing short in this price action, and that therefore actually I want us to go up. I know that most of the move is already being given away, but maybe a little bit of a pump up would be nice. If not, oh well, then I take it from this range. Just take it day by day, trade by trade, as I always say. And other than that, if you don't believe me, another saying that I always say is that the price goes higher than you think, lower than you expect. So maybe at 25k, you thought, oh, we will never go to 17k anymore. We'll never dip below 20k. Well, there you go. 2 weeks later, we are now trading approximately at 20,000, and we dipped already a few times lower. So it always goes higher than you think, lower than you expect. And therefore, eventually, I also think that we are going to sweep the ultimate lows because it's just so much liquidity underneath, and that will be the perfect bear scenario for the market maker to grab that liquidity. And as you can see also here on the indicators, it just is a horrible story so far, and all the red candles come with a lot of volume, or more volume at least, than the green candles, and that is for me still the sign that everything's super bearish. And of course we have the Fed and interest rate hiking will not stop anytime soon, so almost you can't lose on a short, shall we say. Was that it? Yeah, I think that was it for today. So if you like these kinds of videos, then please do me a favor, like and subscribe, click on the bell, click, and also if you don't miss anything, leave me a comment or share this video with your friends if you think that's useful. Also, don't forget to check out that video that I made yesterday, why we are going lower than 17.6k. I will also make sure that pops up right now, and I'll see you guys very soon again in the next one. Bye bye.